If you have been looking for the most effective strategy to grow a small account, then you've come across the right video. In today's teaching, I'm going to be showing you all the best strategy that allows you to add on multiple positions on a swing trade. Okay, so this strategy allows you to add on multiple positions at specific levels, not just at random levels, okay, at specific levels, and using an organized approach to help you maximize a particular swing position. Okay, so grab your pen, grab your book, and take note of what I'm going to be teaching in today's lecture. Let's go, guys. What are add-ons? Add-ons entails adding more positions on a swing trade than just the original entry position. Okay, so what does add-ons do for us? Add-ons allows us to be able to maximize our opportunity on a swing position. Instead of just making profits from only one swing entry, add-ons allows us to be able to have multiple entries and make more profits from these multiple entries to add to the profit from the original position. Okay, so add-ons are a great way to grow a small account. Okay, so with add-ons, we follow an organized sequence of add-ons. We are not just opening a swing trade and recklessly adding on positions. No, there are some organized methodologies that we use in order for us to be sure that our original entry is already soaking in profits, and the add-ons, which will be added at specific levels while prices are in profits, the add-ons will be able to just add to our original position and allow us to grow a small account faster and allow us to even compound better. Okay, so now what are these add-on criteria that we follow? Number one, for you to be able to add on, the original position or the swing trade, the overall swing trade must be in the direction of trend. Okay, so this means that what you don't add on when you trade retracements, okay, or when you are trading against the flow of the market. You only add on when you are trading in the direction of the market. Okay, so if price is in the direction of the market and you have your original entry, if that particular entry has soaked in some profits and prices gives us opportunity for add-ons, we are going to add on, knowing fully well that what we are trading within the flow of the market. Okay, so what is the second criteria? Add on after prices makes a retracement. Okay, so this means that what you don't add on when prices is on a push. You add on when prices is on an exhaustion. Okay, for example, if I'm to show you all a quick example of what I mean right here, this is push, this is exhaustion, this is push, this is exhaustion. So you add on when prices makes an exhaustion, add on when prices makes an exhaustion, never add on when prices is on a push. No, you add on when prices is on an exhaustion. Okay, so that is very important when it comes to add on. Okay, so what is the third criteria for adding on? Break even previous entries. If you are adding on a position, make sure you break even previous entries. Okay, so that is, for example, if you added a position right here, this is the original entry, right? A market makes a push, a market comes back for an exhaustion. You break even this first position before adding on a new position. If market makes a push again and comes back right here, you break even this second position before adding in a new position. This is to render the first two entries risk-free. Then when you now enter into a new position, the risk on the first entry has been transferred to the second entry, then the risk on the second entry has been transferred to the third entry. So this third entry is the only one that has an active risk. The first entry and the second entry are risk-free. Okay, so that is very important when it comes to add-ons. Okay, so what is the fourth thing? The fourth thing is that use proper risk management. When you are adding on, don't be reckless about it. Okay, you must use proper risk management. For example, if you have a live account and you have 100%, right? If on the first add-on here you risk 1%, on the second add-on here should also be the same 1%. That is what you would have broken even the first position, and right here now take that 1% and now put it here. Don't be reckless about it. You know, since you've broken even the first one, now transfer that 1% risk to this one. Okay, then when you've broken in the second one, now transfer that 1% risk to this one, so that at the end of the day, even if one of the trade hits stop loss, you've only lost 1%, which is what the original risk from that position. Okay, so proper risk management must be applied. These are the things that allows you to be able to add on safely, and you're able to be guaranteed of wins. Okay, so add on only one position at a time. So don't go ahead and add on multiple positions at a time. Make sure that like we said, when you add on when you put the original entry on the first one, the second one, which is an add-on, make sure you break even the first one. Okay, don't go ahead and add multiple positions. Make sure it's just one position. When price makes a swing again and comes for a retracement, add only one position again right here. Then prices is going to go ahead and continue the swing. Okay, doing this correctly is going to allow you to be able to capitalize on a single swing position. Obviously, we know that swing trades are trades that you hold for probably a week or 2 weeks. So instead of just holding one position on the swing trade, add-ons allow you to be able to have minimum of 2, 3, or even 4 positions on a single swing trade, and you are able to maximize and make crazy amount of profit, which would allow you to grow a small account. Okay, as soon as you are done with that swing trade, you jump into another swing trade again, manage your risk again, use like 1% on a trade again, and manage it and follow all of these things that we talked about. Like we said, it must be in the direction of trend. Add on after prices makes a retracement, not when prices is making a push. It must be when price is making an exhaustion. Then break even previous entries. All previous entries must be broken even before new positions are added. Imagine you add on a new position and prices goes against you, okay, and your previous positions are not broken even yet. Okay, so imagine prices coming here, hitting your first stop loss, hitting your second stop loss, hitting your third stop loss, just because you refuse to follow this golden rule of break even previous entries. Okay, so that's important, so that even if prices is to completely go against you, this one, it could hit your stop loss, but the rest will be break even. So you are only losing 1%, because the rest will be broken even, losing at zero. Okay, so that is very important. And we said risk management must be applied. Whatever you risk on your first position, which is your original entry, must be the same that will be risk on your second position, your third position, and your fourth position if there's any, and add on only one position at a time. Okay, so don't go ahead and it's an add-on, you add on 3 positions at a time. No, that is reckless. Okay, and this is the problem that traders face when it comes to adding on. Okay, so if you follow these 5 golden rules, I call it the golden rules of add-ons, then you will be able to excel in your add-ons, and you would see that whatever approach you have been able to, whatever approach you were applying previously that was not working, you will see that this particular one will begin to work, and you see a complete change in your add-ons. Okay, so now let's go on to the real life chart to apply these add-ons onto a real life chart and see how we are able to maximize swing trading, okay, and maximize positions on a particular swing trading entry. We are going to be taking US 30 for our teaching today. As usual, we are going to apply our top-down multi-time frame analysis from the monthly time frame and taking it down to the small time frames to look for a trade entry opportunity, and in this case to look for multiple add-on positions. Okay, so as usual, the first thing we do when we come onto the market is to identify the real-time points where price is at. As soon as that is done, the next thing is to read the structures that took prices to that point. What are the structures that took prices to that point? Let's read the structures. We can see price out on big fractals here of push, exhaustion, right here. Then prices now began making small fractals of push, exhaustion, started with big fractals, push, exhaustion, made another big fractal, push, exhaustion, then made small fractals of push, exhaustion, then the smallest fractal here of push, exhaustion, push. Okay, so without any iota of doubt, US 30 is very bullish on the monthly time frame. Remember that a bullish structure entails the coordination of higher highs and higher lows, okay? And these are all clear coordinations of higher highs and higher lows, okay? So what are we going to do? as usual, we are going to what? Take the last higher low right here. This is the last higher low right here. And now we are now going to take it what? With the highest point of prices. And we are going to look for opportunities within what will now be known as our range of focus. And this is our range of focus. Okay, so this is known, just like we said, as our range of focus. Okay, so we are going to take this range of focus to the weekly time frame to look for an opportunity within this range of focus. Okay, so now one might ask that why are we not focusing on all of these other parts, starting from 1992 or all that price after the bullish structure? Our job is what? On the monthly time frame, we know that price is clearly bullish, right? So what are we going to do? Let's take the last higher low and take the highest point that prices got to look for a trade entry opportunity within the range of focus. Okay, we don't want to have any business below this. We don't want to have any business above this. Instead, we just want to have business within what? This range, also known as the range of focus. Okay, so now we'll take that to the weekly time frame. Okay, so within the weekly time frame, within our range of focus, we know that what? That if we are buying in the direction of trend, because clearly price is bullish. So that means that within this range of focus, if you are buying it in the direction of trend, while if you are selling it, it's a retracement. Remember, I told you that what? If you want to trade add-ons, the opportunity must be in the direction of trend. So this means that what? In US 30, you must be buying. Okay, if you are buying, this is when you can be able to place add-ons, okay, on US 30, because clearly, if you are buying it in the direction of trend. Okay, so now, what went on the weekly time frame? Here, we saw prices make push, exhaustion, then price had a new fractal here, push, exhaustion, push, hit the highest point here and broke structure. The question is, what fractal was broken? It is a fractal that starts from here. Okay, remember that what? Fractals are likewise movement of prices, and fractals are also the length of the exhaustion. Okay, so this exhaustion right here is also similar to this, but this exhaustion here and this exhaustion here, even if you bring your measuring tools, they are more. Okay, they are more in terms of pips. Okay, this one is about 311, while the broken fractal right here is about 184. Then the one behind it is about 172. And remember that what? A break of a small fractal does not affect the big fractals. Okay, so the fractal that is broken is a fractal that starts from here. Okay, and we can see prices make push right here, exhaustion right here, push, and broke structure. When prices broke structure, what are you going to do? Bring out your Fibonacci from the lowest point of likewise fractal here to the highest point right here, and we can see that what? Prices completed that exhaustion at the 61.8. Remember that what? A 61.8 completes an exhaustion. Okay, because what? In a retracing market, always apply your 61.8 as your exit, because what? A 61.8 ends an exhaustion, while what? The 100.0 Fibonacci level ends an opportunity in the direction of trend. Remember that at the end of the day, your Fibonacci is a retracement tool and it is also an extension tool. It allows you to know where a retracement might be ending, which is at 61.8, and it also allows you to know where an opportunity in the direction of trend might be ending, which is 100.0. Okay, so now that we've been able to see prices at 61.8, what are we going to do? We will just write it out that this is what? A 61.8 level. Okay, so we are aware of this, that this is a what? PRA. We also known as what? A potential reversal area. Okay, so now let's take this window as our range of focus from the highest point right here to this 61.8, which is a potential reversal area, as it ends that retracement. It ended the retracement opportunity at 61.8. Okay, so now we'll take it to the daily time frame. What is going on within this daily time frame, right? We'll read the structures that brought prices down to 61.8 to end what? To end the exhaustion. Okay, let's also write that it's a PRA, potential reversal area. Okay, it ends what? It ends that retracement. Okay, so what are the structures? We can see prices make push, exhaustion right here. Then within small fractal, it made push, exhaustion, push, and broke structure. This was the first opportunity it gave within small fractals. Then eventually broke big fractals, and eventually went and headed to this resistance here. Okay, for those that have seen my other videos, before prices got to this resistance, we have already predicted ahead that price is coming here. Okay, so our job was just to look for an opportunity to tap into, the bullish move in the direction of trend. Okay, so now, as soon as the break of structure was found, first of all, this was the first opportunity here. Push, exhaustion, push. Okay, within this fractal that was broken, the opportunity ends here within this small fractal. So what the prices do? Prices went and now broke into a new fractal. As soon as prices broke into a new fractal, by closing above this last lower high here, we know that price is coming here within the direction of trend. So now that this has been noted, what are we going to do? This is now where our entry skill comes in and our add-on skill comes in, to be able to what? Enter this opportunity and add on multiple entries to be able to capitalize on this swing position. Okay, so now what are we going to do? Our job now will just be that what? Okay, let's take all of these bullish moves, right, that eventually got to take profit here. Let's take all of these bullish moves and see where our multiple add-ons would have been to swing prices to the highest point and take advantage of this swing position. I've done this particular add-on analysis for my students in my mentorship program, and they are all familiar with this, and a lot of them have been able to grow their small accounts into very big accounts because of what? Because of the knowledge of add-ons that I've simplified for them. And on a particular swing trade, sometimes they have 3-4 positions that are add-on in an organized manner, not randomly. Okay, and this has helped them to be able to have a consistent add-on system and grow their accounts geometrically. Okay, so now let's take it to the 4-hour time frame to see where we would add on our position. Okay, so first of all, we are going to start when prices broke this big fractal right here. Okay, when prices broke this big fractal right here, in order to provide a trade opportunity to as much as this place. Like we said, the first opportunity, which was when prices broke all of this structure right here. Definitely you would not have seen an opportunity on the 4 hours. If you went to like maybe 15 minutes time frame, you might have seen an opportunity, but this opportunity ends here. Okay, because this is 100.0 of this particular fractal. Remember that what? We are fractal traders and we trade within the confines of the opportunity that each fractal provides, right? So this level here ends the opportunity in that fractal. Okay, it's also known as 100.0 in the direction of trend. This one that is written as 1 right here is also known as what? 100.0. It ends opportunities within the direction of trend. Okay, so now let's take all of this out and now let's look for opportunity, the opportunity that was offered to us within what? Within the big fractal. What is the big fractal? It is what? All of this, prices making all of this small fractal right here, all of these were small fractals. Then what the prices eventually do, it established a big fractal right here, just like we saw on the daily time frame, made the push and made the break of structure. Clearly, we know that we are coming to this resistance. So our job was just, let me look for add-ons to ride positions to as much as this level. Okay, so now that has been signified, where would we have add on our positions? Okay, so first of all, let's put an horizontal line here to indicate where the break of structure happened. Remember, this is the resistance here, and this is where the break of structure happened. So this is where all the candlesticks that broke structure. Okay, so what was the first thing? The first thing is what? Identify a reversal zone. Okay, or identify a PRA. What are PRA? PRA can be previous area of support or resistance, or even what? The Fibonacci 61.8. Okay, so now when prices broke into this new structure, the first PRA that prices provided for us is coming to retest this inner resistance right here. Okay, so it's important to take note that prices does this. Okay, it will break a structure and eventually come and retest the inner resistance. Okay, how significant is this inner resistance? This inner resistance was the last lower high that got broken in the previous structure. So prices now broke into another fractal right here. Then retested this inner resistance right here. So this inner resistance is an opportunity for your first add-on. Okay, we are still going to go over to the small time frame to break these particular entries one by one. Okay, so this is your first add-on, or let's even put this as your first entry. Let's just call it an entry, since this is the first position that we are going to be entering on this particular trade. So let's call it a first entry. Okay, so this is your first entry and this is your original entry of prices. So after prices completed that, you can see this specific place right here. We can see that this was a resistance that was broken and prices eventually came to retest the broken resistance. Okay, so this level right here is your first add-on officially. Okay, we're still going to go over small time frames, and I'll show you pinpoint how to apply these add-ons. Okay, but we can see that what this resistance was broken right here, and prices eventually came back to retest that resistance, turning a broken resistance right here to a support. Okay, just like prices did here, it eventually turned this resistance to a support. Then this resistance here, price eventually came back and turned into a support right here. So this is the first add-on. Then where does the second add-on come into place? In this position, we can see if we bring out our Fibonacci from the low to the high. Remember, we said that add-ons can be added from what? Support, resistance levels, or even the Fibonacci 61.8. Okay, so this level right here is the Fibonacci 61.8 level, as we can see. And this level provided us our second add-on. Okay, all of these to ride to take profit at this level. In fact, now that price has hit take profit, what is our job? Our job is very simple. Just wait for prices to come back again, make a retracement. You know, you don't add on when prices is on a push. You add on when price is on an exhaustion. Okay, so allow prices to make a retracement, then identify levels of PRA, that is potential reversal areas. Okay, so in this case, what are the PRA levels? One is this resistance. Price is trading around this resistance. This resistance can be able to provide us another opportunity to buy back to this level. And if prices does not respect that resistance, another level is what? The 61.8 level. The 61.8 level can also be another potential reversal area that would give you an opportunity to ride to the highest point of the zone. Okay, so either or any of these levels can be your PRA, resistance turn support to take off, or 61.8 to take off. So this level now can either be your third add-on. That is what, if you are still holding this position and want to ride to complete the entirety of this zone, or this level can also be a new entry position for you. Okay, but we are just going to call this a third add-on, just, you know, making an assumption that you've not taken your profits and you want to have another add-on in order to swing to the highest point of all of this zone. At the end of the day, you are trading in the direction of trend, so you are, you know, you are good to go. You are good to go. If you are not set to take profit yet, and if you are not set to take profit yet, you can add another position and swing all to this particular level. Just, you know, enter the zone properly. Okay, so now we are now going to go over to the small time frames to see how we would have been able to add on this specific positions. Okay, so let's go to the 1 hour time frame and keep taking it down to even as low as the 30 minutes and the 15 minutes time frame to look at where we would have added on. Okay, so now let's go on to the 15 minutes time frame. Okay, so first of all, this was the original entry. We can see this is the first entry. Okay, so we have the first entry have been gotten. Remember that that prices broke above this resistance level. Okay, it broke above all this resistance level right here. And what the prices do, it even broke into another new fractal, then came back to retest this resistance here. This resistance level is a PRA to grab the support and take off. Okay, so how would we have gotten our first entry? Would have gotten it by reading the structures that brought prices down. We can see prices make push, exhaustion right here. Then prices made small fractal right here of push, exhaustion, push, break of structure right here. You could have bought directly at the break of structure within the small fractal, understanding that that you are trading in the direction of trend and price has already seen a PRA, so you can buy pinpoints when prices came for this break of structure, even if it's a small fractal, because what you are buying in the direction of trend. Okay, or you could have waited for a discount right here to buy and swing it for your original entry. Now let's see what the risk to reward of your original entry would have been. If you are buying pinpoint right here with your stop loss right here, you can see that even when prices made all this retracement, you will still be excellently fine. Okay, now your take profit at the highest point. Where is the highest point? This is the highest point. At the highest point, you'll be around what? 1:11. Okay, 1:11 is crazy. You are risking $100 on this trade, you go home with $1,100. You are risking $1,000 on this trade, you go home with $11,000 on a very beautiful 1:11 risk to reward. Entering what? on the original entry, not even waiting for a discount. Remember that what we have 3 entry criteria, right? It's like this: push, exhaustion, push, break of structure. Enter at the direct break of structure, entry variation 1, and I'm only going to be teaching 2 entry criteria in this lecture. Entry variation 2 is what? Allow price to come back for a discount to 61.8, enter pinpoint, then what? Then right, because we are knowledgeable that after a break of structure, what does prices do? Prices comes back for a natural 61.8 retracement. Okay, so now after entry variation 1, what would you have done? Okay, would have brought your Fibonacci from the low point right here to the highest point, which is this point right here. Okay, the highest point that prices got to, then this is the lowest point here. Then if you did not buy pinpoint at entry variation 1, you could have bought pinpoint at entry variation 2, which is what? Pinpoint 61.8 buy. This would have given you a crazy 1:18 risk reward up to our take profit right here. A crazy 1:18 risk reward. So if you did not enter using the original entry from the break of structure right here, which is what? A 1:11, you could have entered here for a very crazy 1:18 risk reward. 1:18 means you risk $1,000, you go home with $18,000 on your original position. This is just the first position, not talking about what we could benefit from the add-ons, just the original position. Okay, so just again to reiterate, this is where the structure got broken. This is the last lower high right here that prices broke. Okay, and remember that this level right here is a PRA because it is a previous resistance level. Let's put it in caps. PRA because it is a previous resistance level. So prices only came back to this resistance level to turn into a support to take off. Okay, which provided us with our first opportunity at the break of structure right here. And if you wanted to be patient enough and not enter directly on the break of structure, understanding the fact that after a break of structure, prices gives a discount, then you could have entered at what? At entry variation 2, at what? At the discount, and swung for 1:18 risk reward via our original entry. Okay, but beyond our original entry, where could we have gotten positions to be able to add on into further entries? Okay, remember that this level right here is our first add-on, right? Okay, so for our first add-on, what are we going to do? Just like we read on our original entry, we will read the structure that took prices down to the PRA and look for a break of structure. As soon as we see a break of structure, we are going to place our buy position. Okay, so what are we going to do in this case? Here we can see prices make push, we can see prices make this exhaustion, then we can see prices make this long push right here. Okay, so this right here is the last lower high. Okay, so for me to place my entry, what am I going to do? I'm going to have to see a break of structure. Okay, so when I see a break of structure right here, I'm going to place my entry right here. This means that what? My second entry is going to be around here. Obviously, before I place my second entry, my entry right here would have been broken even from here if I entered using entry variation 1, or broken even here if I entered using entry variation 2, just before what? I enter the next one. So before I enter the next one, which is going to be right here at the break of structure, so how is it going to be? Where is my stop loss going to be in this case? This one might not give us the best risk to reward because we did not get a structure. This was just a very steep drop. Assuming we got a structure here, we could have entered earlier, but there was no structure here, just a steep drop. Okay, so the risk reward on entry variation 2 might not be the best. Okay, so let's just go ahead and calculate what our risk reward will be. We'll put our stop loss around this low level right here, and our take profit is going to be at the same point at this zone right here, where we are going to ride for about a 1:3 risk to reward. Okay, so on our original entry, if we entered for 1:11 or 1:18, this is another opportunity for 1:3. It adds on. So I would have broken in the first original entry, then this particular one will be riding for what? For 1:3. Okay, it's a beautiful one and it's an add-on. Yeah, if I risk $100, this is an additional $300 for this position. If I risk $1,000, this is an additional $3,000 for this position. You understand? So now that concludes the opportunity for what? For the first add-on. Okay, now for the second add-on, we said this is a second add-on, right? Okay, so now what made this particular zone a PRA? What made it a PRA was we identified this zone as what? As a 61.8 zone. Prices came back for a 61.8. We can go to the 1 hour time frame just to reiterate that level again. Remember, it's from the low point right here to the high point, and this is what? This is the whole 61.8 zone where prices came to respected the 61.8. Remember that what? 61.8 ends the retracement. Okay, so prices just came to respect 61.8 and grab an higher low for continuous takeoff to the top. Okay, so now let's take that level to the 15 minutes. Okay, so on the 15 minutes time frame for the second add-on, what are we going to do? We are going to read the structures that brought prices down to this 61.8. Okay, so what are the structures that brought prices down to this 61.8? We can see prices make all of these levels push exhaustion, small fractal push exhaustion right here. Then prices now made very small fractals right here. It is push, exhaustion, push. Prices broke that structure, pulled back right here, and is heading to the top. Okay, so in this case, where would we have gotten our entry? We would have gotten our entry when the last lower high right here got broken. Okay, all this lower high right here, when it got broken, this was the candlestick that broke this lower high. So because we are trading in the direction of trend, we can be able to buy within small fractals, knowing fully well that it's in the direction of trend, and prices will eventually go and even break into bigger fractals. Remember that the first fractal that was broken is all of these small fractals here. Prices broke it, pulled back to respect this resistance, turned this resistance to a support, then price broke into bigger fractals and kept going. Okay, so but because we are trading direction of trend, we know that what? Okay, a PRA has been found out because what is a 61.8, and what we've seen a break of this small fractal here, and we can be able to place our position right here with our stop loss right here at the low right here. Then where's our take profit for this opportunity? Our take profit ends here for about 1:3. Okay, so for our original entry, we got what? 1:11. For the second entry, we got, which is an add-on, we got what? 1:3. For the third entry, which is an add-on, we got 1:3. All swinging to take profit at this point. So at this point, you probably might have taken profits, you probably might have closed all your profits. The first one on 1:3 or either 1:18, depending if you entered using entry version 1 or 2. Second one 1:3, third one 1:3. So all of these entries allows you to be able to capitalize on a particular swing trade. It allows you to capitalize on a swing trade. Okay, so now that all of those entries are done, in fact, if you have not taken your profit and you are like, oh, you want prices to hit this zone or maybe complete, because at the end of the day, all of these levels are zone, you want price to, go back to all of this zone, what would you have done? There could be an opportunity for even a fourth entry. Okay, so we identified all these levels here. We identified this level here as what? As a 61.8 level. And we also identified this level right here as a resistance level. Okay, so let's go back to the 30 minutes again to see these levels. Okay, remember this is a resistance right here. That's where price is currently at. Price can grab a support right here to take off into the zone properly. Okay, or prices could decide to come back again to the 61.8 in order to take off. Okay, how did we get the 61.8? We brought out our Fibonacci and we took it from this point right here to this point, and we realized that all of these zones here are a 61.8 zone, which prices could come here and grab a support to take off. Okay, so now that our PRA has been gotten, either prices respect this resistance, turns it to a support to take off, or prices comes for this level right here at the 61.8. Either levels, all of this could be a third add-on or could be a new entry. If you've taken all your profits at that resistance, you don't want price to go further within this your resistance zone. If you've taken your profits at the earliest place within the zone, that is fine. Okay, so this could be a new entry. Okay, so now for this new entry or for a potential third add-on, what do? You read all of the structures that brought prices down. What are the structures? These are now push, exhaustion right here. All of these are still push. What do you wait for? Allow price to go establish another lower high. Okay, either price respects this resistance turn to a support, establish another lower high, come and break. As soon as prices breaks, what do? Tap into your new entry right here. As soon as the break of structure has been concluded, put your stop loss at the low and ride to take profits, probably for a 1:1.5. If you want to take profit around here, or you want to take profit higher at the zone, 1:1.6. Okay, that is what if prices turns this resistance to a support. However, if price decides to come down to this level, which is the 61.8, let's go ahead and write 61.8, and this is the level that price wants to reject. what do? We read the structures that brought prices down, and as soon as we see a break of the structure at the 61.8, we'll place in our buy entry position right here. Right here will be our buy entry position. Our stop loss will be anywhere around there, and our take profit will be here for about 1:2 risk to reward. Okay, so this is how to be able to capitalize multiple entries on a particular position. Okay, right here you can see that we've been able to see about 3 or 4 add-ons just on a single position. By the time you accumulate it, we are up maybe about 1:20, on a cumulative on this particular, swing trade. But beyond this, it's just the organization of how we add on. Okay, if we are placing this add-on, all of the other trades must have been broken even. Second add-on broken even, first add-on broken even, original entry broken even, before giving space for a new entry, which is going to be our third add-on, which is our fourth entry position, riding back to this particular zone. Remember, it must be in the direction of trend, break even all of those previous entries, maintain a good risk management, and add on only one position at a time. By the time you do this, you are going to have an excellent add-on system, and you are going to see how you become crazily profitable with this. Like I said, for this third add-on, it could just be a new entry for you. If you've taken profits on all of those ones, this one will just be a fresh entry for you again for about 1:2.7. $100 for $275, or $1,000 risk for $2,700. Okay, so this is how it works with our system. So if you want to learn further, you want to take this system and master it, I have a mentorship program where I have a full course on all of this, on add-ons that my students have been able to learn, apply, and they have been able to master for crazy profits on a single swing position. Sometimes we could have 3-4 add-ons on it, and they've been able to trade it and grow small accounts tremendously. If you want to also do that, link is in the description below for you to join the mentorship program, and I will be here to mentor you on how to be able to use add-ons on any asset at all, be it commodities, forex, indices, or whatever it is. So in that case, see you guys in the next video.